Hi, hello, my dear CA intermediate and CA final students. Thanks a lot for your continued support. Many students were sending me telegram messages asking for a lot of doubts, and I have been replying to all those doubts. But there are some section of the students who may not really get that particular doubt, but when others are asking, so they wanted to know as to, okay, for this type of question also could come, and what will be the answer related to that, like that. So that's the reason why all good frequently asked questions I am just putting into one separate website. So we have launched idtwizard.com. In this idtwizard.com, it is like a forum, a blog, articles, all these things on GST. It will be into this place wherein the student can see what are the queries which are lot of good concept oriented queries. Everything I'll be hand picking and putting it like a FAQ model. For example, so you can just visit this website, and in this you can see GST for students. So once you click on GST for students, so like I have divided, I just started with this. So depending upon whatever queries you are asking, I'll be updating in this place. For example, exemptions under GST. And one student has asked me a query, robotic classes to students, is it taxable or is it exempted? So generally, any service provided by education institution to its students, faculty, staff is exempted. Even if a school is taking robotics classes to its students, it will be exempted. However, if the student partners with a company or a coaching center to provide the robotics classes, and the fees is directly collected by that company or a coaching center from the students, then it will be taxable, that is not covered under exemption. So because we don't have service provided to education institution as an exemption in this place. So like that, so then another student has asked me a question, what is the difference between construction service and works contract service? So because we just get confused like this, all these queries, so like chapter wise, and even so everything I have given this. Apart from this, some other queries like customs for students, this particular website you can make use of even in future also. So whenever you complete CA and thereafter in your practice you have any query etc., you can just visit the professionals corner, and there also you can just see what are all the queries which are asked by the students etc. And so you please make use of this. So I really wanted to connect more with you and enhance the knowledge and the learning experience on this subject of GST and customs, both at intermediate level, final level, and after final level also. And there is one interesting topic which we are going to discuss today, on which I have published an article also in my website, this IDT Wizard, that is taxability of liquidated damages. So what is the taxability of liquidated damages? You can see here. Because this liquidated damages is a concept which many students are not understanding, or they are applying it wrongly. So it is just an effort in order to make this concept simplified, because this liquidated damages concept we have at intermediate level as well as at final level. So it is given in supply chapter, exemptions chapter. First of all, whether this liquidated damages is taxable or it is supply or exempted, what is the treatment of this? First of all, liquidated damages means what? It is like you enter into contract. When you enter into contract, you may breach the contract. The breach can be any type of breach. So when you breach the contract, the person who suffers the breach will expect you to pay some money to him. So that money what you are paying is what is called as liquidated damages or compensation or consideration for tolerating an act. Okay. So basically what is the treatment of that? We have also got a CBIC circular in this regard. So CBIC, they gave a circular in 2022, clarify the GST implications on various payments such as liquidated damages, compensation, penalties and cancellation charges arising from breach of contract or other legal provisions. So this is that circular, and in this we need to understand something. Already we have, in supply of goods versus supply of services, that is section 7 subsection 1a, read with schedule 2, 1 point, that is agreeing to the obligation to refrain from an act, or agreeing to the obligation to tolerate an act, or agreeing to the obligation to do an act. This is what in simple words we learn: doing an act, not doing an act, or tolerating an act for a consideration will become supply of service. So that is there, even today also it is there, but how it is connected to this concept of liquidated damages, fines, penalties or similar payments. So we are trying to understand the general principle first. The general principle says that liquidated damages, or penalties or fines are not taxable. Generally it is not taxable. So that is the position which the law says. Generally it is not taxable. Generally it is not taxable because basically these are mere compensation for the loss or damage. Got it? So basically these are not taxable and do not involve any agreement to tolerate or accept breach of any act, but they are taxable. Generally they are not taxable, but they are taxable. When they are taxable, see there, they are taxable if the payment involves tolerating an act or situation. So I am tolerating your act for which you have to pay me some amount, like that. When there is clearly something specified, then it will be taxable. Or providing a facility, okay, I am giving you a facility for which you need to pay this, so then it will become supply and it will be taxable. So this is the general principle you need to keep in mind. Generally liquidated damages, penalties or compensation will not be taxable. However, when there is expressly written that, so I am tolerating your breach for which you need to pay this amount, okay, so then it will become taxable and it constitutes supply. Again, when it will be written, where it will be written, how it happens, etc., also we will try to see. So look into this table. What are the payments which are not taxable and what are the payments which are taxable? First, what are the payments which are not taxable? Number 1, damages for breach of contract. Damages for breach of contract. So delay in project completion. There is a delay in project completion for which you need to pay some amount, or forfeiture of earnest money deposit in immobile property deals. Generally immobile property deals, so you need to pay some earnest money and block the building or block the flat, etc. And if you have to pay the remaining amount. If you are not paying the remaining amount on time, so then this amount will be forfeited. That penalties for violation of laws like traffic fines, etc., pollution norms, mining violations, check dishonor charges, salary forfeiture or bond recovery for premature exit from the employment. These are all not taxable. What is the reason behind it? Why is it not taxable? Because these are not payments for tolerating a breach. So it is not for tolerating a breach. Rather, it is to discourage the breach or to penalize or compensate the person. Okay. So basically here it's not like I am agreeing to you, so you pay this money. No, that is not the intention here. This intention is purely in the nature of compensatory nature. Remember, compensatory nature. Compensatory or penal in nature. What does it mean? Which means that there is no recourse to it. So it is final. Something has happened and the other person has suffered the loss. You did something and the other person has suffered the loss. So for that, something compensatory or penal in nature is payable, then it will not be taxable. On the other hand, there are certain amounts. These payments are taxable under GST because they constitute consideration for a supply. What is that? Late payment fees or penalties. That is, you are making the payment late and I am accepting that you will pay late, for which I will levy a late payment charges. Then cancellation charges So like you booked a ticket, or you booked a hotel, or you booked a service in Urban Clap, etc., and you are cancelling that. They are accepting your cancellation, for which you need to pay some charges, that cancellation charges. Then prepayment penalties. Prepayment penalties means, so actually foreclosure charges. You have to pay the loan and you are pre-closing it. I am accepting your pre-closure. As I am accepting your pre-closure, so for which I will charge a pre-closure charges, or agreement you are terminating before, for which I will collect some charges for terminating the agreement before. Okay, that is early termination penalties. Basically in these cases, why these are all taxable? These are considered ancillary or bundled with the principal supply and are taxable at the same rate as applicable to the principal supply. Basically this is also not a separate supply. So there is a principal supply, as a part of this is collected. That's where you take a ticket cancellation charges. You booked a flight ticket is taxable, and when you cancel the flight ticket you need to pay some charges. So that cancellation charges is also taxable. Like that, if the principal supply is taxable, these charges or penalties, whatever is levied, is also taxable. Okay, basically that is the idea here. But which you need to check first? First you need to check whether it is compensatory or penal in nature. So say this, see the conclusion. The applicability of GST on payments such as liquidated damages, penalties and cancellation charges depend upon the nature of payment and the underlying agreement. Nature of payment and underlying agreement. If the payment is merely compensatory without any agreement to tolerate an act or any situation, it is not considered as supply and it is not taxable under GST. Okay, basically that will not be treated as consideration, and consequently it is not taxable. Of course it is not a supply. However, if the payment is for tolerating an act or refraining from an act or doing an act as per the agreement, it constitutes supply of service and is subject to GST. It is essential to examine the specific terms of the contract and the intention, mainly intention behind the payment, to determine GST applicability accurately. So what are the key questions to apply? First, to decide whether GST is applicable or not, you should ask, is the payment compensatory or penal in nature? So if it is compensatory or penal in nature, it will not be taxable. Okay, then does the payment involve tolerating an act or providing a facility? Yes, then it will be taxable. Is the payment bundled with the taxable supply? Yes, then tax is charged at the same rate of principal supply. Now again, there is a difference between compensatory payments versus penal payments. Both are not taxable. But what is the difference between these two? Compensatory payment is to compensate the aggrieved party for loss or damage suffered due to breach of a contract or agreement, whereas penal payment is to punish the defaulter for breach of the contract. Okay, both are not taxable. Remember, both are not taxable. Either it is compensatory or penal in nature. Okay, so basically in compensator, what is the nature? These payments are restorative and aim to make the injured party whole without any intent to penalize the defaulter, whereas here these are punitive and are intended to, penal or put some penalty on the person. Basically compensatory payments are like purely reimbursement of the actual losses. You committed an act, I suffered the loss, so you are paying me that loss. That is compensatory. Whereas penal payments are punitive. Punitive means what? So it is like that cannot replace the loss, but in order to discourage you from doing it, I will be levying. For example, penalty for dishonoring a check. You have dishonored the check and you violated the traffic. So to discourage you from doing that further, so I will be levying something that is known as penal payments. And basically, when you complete the, breach the contract, completely terminate the contract. Remember, termination of contract. Termination of contract is also punitive in nature, so that will be not taxable. Same way, compensatory means, so compensation for damage of property, infringement of rights, liquidated damages for delay in completing project, forfeiture of earnest money in case of a failed agreement to sell an immovable property, So all these are compensatory payments. Basically, both compensatory as well as penal will not be taxable. So what you need to check in the question is that first, is it compensatory or penal in nature? You check. If yes, it is compensatory and penal in nature, definitely it will not be treated as consideration and it will not be taxable. Okay. So this is one question where you can see, discuss the taxability of the following under GST law. Late fee, fine or penalty charged by telecom company upon delayed payment of telephone bill, such charges stipulated in the service agreement. So what is that? Is it compensatory or penal in nature? No. It is agreeing, fine, agreeing to tolerate an act. So we are agreeing to accept your late payment, for which you need to pay the late charges, late pay charges or late fees. So this will be coming under taxable. Okay, this will be taxable. Second, interest charged by supplier of goods from buyer who has failed to pay him within agreed upon credit period. Such charges are stipulated in the sale contract. Again, so it is agreed to tolerate an act. So you need to pay, you are paying late, for which they are collecting this. Again, it will be taxable. Prepayment penalty charged by bank from borrower who wishes to repay the loan early. Okay, like early payment charges, such charges stipulated in the loan agreement. Again, it is consideration for tolerating an act. Early termination charges received by the lessor from lessee for early termination of lease. Again, such charges are stipulated in the lease deed. Okay, so basically all these are taxable. Okay, whereas another one, last one, amount charged by bank to customer on non-maintenance of minimum balance in the account, such charges stipulated in the service agreement, even that is also taxable, because here in all these examples the intention is what? It's not compensatory or penal in nature, but the intention there is that they are agreeing to the breach. As they are agreeing to the breach or agreeing to the tolerating your breach, or they are providing a facility, and in the contract it is clearly mentioned and you need to pay the charges, definitely it will be taxable. If it is compensatory in nature or if it is penalizing a person, so then only it will not be taxable. Okay, now we will see one more area. If you see liquidated damages concept here, in one question it is there, Messrs. Diva Fashions enters into contract on 1st February 2021 for 3 years with Miss Shika, a local model, to act as a brand ambassador. Contract to act as a brand ambassador for their products for rupees 1 lakh per annum. Miss Shika terminated the contract on 2nd February. As per the contract, Messrs. Diva Fashions received 25% of the total contract fees paid to Shika, as the contract is terminated before 3 years. Here, what is the intention? So the intention, on 15th February, Ms. Shika had received the contract fee for 2 years at the time of termination of the contract. If you see here, it is not liquidated damages as agreed between the parties. So they are not tolerating, okay, if you want you exit and we will tolerate you, for which you need to pay the charges. No, that is not the intention. The intention here is like compensatory or penal in nature. But sir, you said contract means it will be, no, not contract. The intention we need to see. Here what is the intention? Why are we levying? To discourage the person. To discourage the person to do that, because that is going to cause loss to us. Contract is 3 years. Abruptly when they leave the organization, abruptly when they cancel the contract, so that is going to cause a loss to us. So therefore it is compensatory in nature or penal in nature. Due to that reason it will not be taxable. So you can see here, fee received for termination of contract being liquidated damages, they are merely compensation for loss due to breach of contract and not consideration for tolerating non-performance of the contract. Okay, so that is what you need to check for the intention. What is the intention behind collecting that amount? Okay, then an employee who is leaving the employment, for which a forfeiture salary is taken, again, so it is compensatory or penal in nature. But sir, in case of bank, whenever we pre-close the loan, so they are collecting some charges, but that why it can't come under compensatory or penal in nature. It is not penal. What is the loss to the bank? If you are paying the loan amount early, there is no loss to the bank. So it is not compensatory or penal in nature. They are agreeing. They are telling, yes boss, please pay early. But we are sacrificing our interest in future. As we are sacrificing the interest that comes in future, so therefore you have to pay some charges to us. They are agreeing. Same way, for feature, of earnest money deposit, then why is it coming under? Here also for feature only. So, but why it will be coming? So, under not taxable, simple. We have allotted the building to you. You have paid some money. You have to execute, like you have to purchase it within the time. If you are not purchasing, we need to find another buyer. So, it is a loss to us. So, it's a compensatory. But in the case of bank, it's not a loss. You are anyhow paying the loan. It's not a loss. But same way, late payment fee, anyhow you are paying, there is no loss to me, but I am allowing you to pay. So late, for which I am collecting some charges. When you cancel the ticket, anyhow I am going to sell the ticket to some other person, but I have to do this process for which I will allow you to get out of this, for which I will collect some charges. So please try to understand the intention. So case to case basis only we need to decide, and then we need to see as to whether it will be taxable or it will not be taxable. Okay, so hope this will be useful for you, and there are many such examples which are even given by ICI also. So this is the discussion given by ICI, applicability of GST on liquidated damages, compensation and penalty arising out of breach of contract or other provisions of the law. So they have given a clarification wherein they are telling basically there are three things. So agreement to refrain from an act. Refrain from an act means not doing an act, tolerating an act, doing an act. Already we saw that. And thereafter, below this, liquidated damages, they are telling as to what is the treatment. So I'm just focusing on the examples. So these are not treated as consideration and not taxable. Damages resulting from damage to property, negligence, piracy, unauthorized use of trade name or copyright. Definitely there is a loss. As there is a loss, you are compensating that loss. As you are compensating that loss, or I am penalizing you, so this will not be treated as consideration and it will not be taxable. Penalty stipulated in the contract for delayed construction of houses. So when you delay the construction of houses, clearly mentioned as penalty, no doubt. So this is like penalizing the person. Then forfeiture of earnest money, I told you, you book a property, you are not buying the property. As you are not buying the property, I will forfeit the amount. Again, it is compensatory or penalizing a person. Forfeiture of earnest money by government or local authority in the event of a successful bidder failing to act after winning the bid for allotment of natural resources. All these are examples wherein such payments do not constitute consideration for supply and it will not be taxable. Okay. Then, on the contrary, consider these examples. A contract may provide that payment by recipient of goods or service shall be made before a certain date, and failure to make payment by the due date. So, you have to pay some time, let's say electricity bill or a telephone bill, you have to pay on time. You are not paying on time, there is no loss because you are going to pay in future. But I will be collecting from you the late payment fees. So, here it is not to like discourage or compensatory or penal. It is like I agree, I tolerate your act of paying late for which I am collecting the amount. A contract for transport of passenger may stipulate that ticket amount shall be partly or wholly forfeited if the passenger does not show up. If the passenger is not coming or you are cancelling the ticket, I will retain some amount and remaining amount I will refund. Okay, so which means I am going to sell that to some other person, I am not having any loss. So this is not like compensating my loss, it is only like I will allow, I am tolerating your act of not showing up for which I will collect some charges. A contract for package tour may stipulate forfeiture of security deposit in the event of cancellation of tour by the customer. A contract for lease of mobile or immobile property may stipulate that lessee shall not terminate the lease before certain period if he does so, he will have to pay certain amount as early termination fee. Some banks may similarly charge prepayment penalty if the borrower wishes to repay. In all these cases, there is no loss. They are going to get the amount, but only thing, as I am agreeing to a change in the contract or a variation in the contract, I am collecting some charges. So that is this. Then check dishonor, fine or penalty, already we know what type of nature, penalizing or compensatory in nature, definitely, because there is a loss suffered. One person got the check, believing in you, he deposited and he ended up no money, so there is a loss suffered by him. So to compensate that, it is done. So, or to penalize a person, it is done. So due to that reason, check dishonor, fine or penalty is not consideration and not taxable. Penalty imposed for violation of laws, again no doubt it is penalty. The moment you see penalty, so it will be coming under not read as consideration, not taxable. Forfeiture of salary or payment of bond amount in the event of employee leaving the employment, there is a loss suffered. So termination of contract or forfeiture of salary, all these are the same reason that it will not be taxable and not read as consideration. Whereas late payment, surcharge or fee, so this is agreed between the parties and you are paying it late, so therefore it will be treated as consideration and should be assessed as the principal supply. Like this, these are the examples which are given. So hope you get a clarity about it, see the intention and why it is being collected. Based on that, whether there is a loss, and for that loss are they collecting this which is compensatory or penalty nature, not taxable. Otherwise it will become taxable because it will come under contractual obligation, wherein I agree to the breach or I agree to the variation for which you have to pay some charges. Got it? Hope this concept will be useful for you, and thank you all for patiently listening to this concept, so that in exams it will definitely help you. And moving on to the next concept bytes in future. So whenever you find any critical topic, do message me. I'll make a video on this so that this concept bytes on GST will be helpful for you. Thank you.